Imagine a world where accountants face a business transaction, but there are no rules telling them how to record it. What would they do? Guess? Invent a method? If that happened, every company would report differently, and financial statements would become meaningless. So in that kind of world, how would anyone trust the numbers? That is exactly why accounting has something called the Conceptual Framework. Welcome back to the Storyteller Accountant. In the previous video, we talked about the rules that guide financial reporting. But today, let's go one step deeper. Because even those rules didn't just appear from nowhere. They are built on something, the Conceptual Framework for financial reporting. What the Conceptual Framework is. Now go back to that situation. You're an accountant. You face a transaction you've never seen before. No clear rule, no specific standard. So what do you rely on? You don't guess. You fall back on a system of principles. That system is the Conceptual Framework. It is the foundation of accounting, a set of guidelines that help accountants decide how financial information should be prepared. Think of it as the constitution behind all accounting rules. Purpose of the Conceptual Framework. So why does this framework even exist? Because different people rely on financial information every day. Investors, accountants, auditors, analysts, and they all need to understand the numbers the same way. So the framework helps guide how financial information should be recognized, measured, presented, so that no matter who is reading the report, the message remains clear. What the Conceptual Framework covers. Now, let's look at what this framework actually contains. Not everything, just the key building blocks. 1. Accounting assumptions and concepts. At the base level, accounting relies on some basic assumptions. For example, going concern. We assume the business will continue operating, not shut down tomorrow. Accrual concept. We record transactions when they happen, not just when cash moves. Consistency. We don't keep changing methods every year. Materiality. Only information that actually matters is reported. These may look simple, but they shape how every financial statement is prepared. 2. Qualitative characteristics of financial information. Now, imagine you're an investor reading a report. What makes that information useful to you? First, it must be relevant. It should help you make decisions. Second, it must be faithfully represented. Complete, neutral, and accurate. Then there are other qualities that improve usefulness. Comparability, verifiability, timeliness, understandability. Because it's not enough for information to exist, it must actually be useful and reliable. 3 elements of financial statements. Now, think about every financial statement you've ever seen. Statement of financial position, balance sheet, income statement. They are all built from a few key elements: assets, liabilities, equity, income, expenses. These are the building blocks behind every number you see. 4. Measurement of financial statement items. But here's another question. Even if we identify something as an asset or liability, how do we decide its value? That's where measurement comes in. Accountants may use historical cost, current cost, or present value. And depending on the method used, the numbers you see can change. Important rule. Now here's something very important. The Conceptual Framework does not override accounting standards. If a specific rule under IFRS exists, that rule must be followed. The framework only guides decisions when no specific standard applies. Final insight. So the next time you look at financial statements, don't just see numbers. Think about what's behind them. Behind every profit figure, behind every balance sheet, there is a structured system of principles working quietly in the background. And that system is what makes financial reporting reliable and trustworthy across the world. If you want accounting explained in a way that actually makes sense, subscribe to the Storyteller Accountant. Because in accounting, every number has a story.